What's up everybody? Welcome to the Stocks channel. My name is Cory and today the stock market sold off across the board as we're right back to the June lows. Is the stock market about to bounce or die? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, just a real quick announcement. I will not be doing any videos this weekend and it's still uncertain if I'll have a video out Monday as well. So I will either see you back on Monday of next week or Tuesday depending on how things go. Also, this is the last week to claim the discount for 50% off your first month of bank trade alerts. All you need to do is use that coupon code Labor Day, all one word, no spaces, at checkout to claim the discount. Alright, so today on SPY, we were down 2.09% as SPY is right back down to the June lows right around 362. And as you can tell, we are still in a very strong downtrend of lower highs and lower lows. And we are waiting for price action to confirm that we're breaking the downtrend, which means we are going to need to see a daily higher low followed by a daily higher high to tell us that something is changing in the trend and we could be possibly breaking the downtrend. As you can tell, we have nothing but lower highs and lower lows, so this is still a downtrend until it's not, but we do have some very critical support levels we want to continue to pay attention to. Obviously, the number one critical support that continues to hold up is that June low at 362, and then we do have the 200 simple weekly moving average, which is right there around 358. Now, just a reminder, typically a bear market within a secular bull market will hold above the 200 weekly simple moving average. So 358 is a very critical support level that you can set long risk from if you are taking long trades. If we break below 358 on a weekly close, it will start looking like another 2000 or another 2008 bear market, which is one of those secular bear markets that can stay bearish for a long time, and that is something you definitely want to be aware of. Now, in the short term, if we get a quick spike below 358, we do have that price target down there at 350. Or if we never get to 350 and we reverse the downtrend, we cannot rule out the possibility this is a giant W-shaped bottom. And the last time we saw a W-shaped bottom like this was back in 2009. So we cannot rule out any scenario, and we do need to respect the downtrend, so we can't make any assumptions because we do let trend and price action do all the talking. Until price action tells us otherwise, this is still a downtrend with these valid downside price targets as long as we're in the downtrend. Now, to get more bullish, we are going to need to close above this daily high right here, right around 371, and break back over this gap just below 374 and eventually get back over this level at 390, which is our critical risk level. This is a very risk-off market with a strong downtrend below SPY 390, so do keep that in mind. And also do remember the market is currently at extreme fear readings with extreme bearish sentiment, and we're sitting at very critical support levels. So you cannot completely rule out the possibility we could see a very strong rally off of this support zone. Remember, volatility works in both directions, and with the VIX above 30, this remains a very volatile market. On the NASDAQ 100 triple Qs, we were down 2.88%, and we're right back down to the June lows at 271, and intraday we were starting to approach the price target at 267.5. As you can tell from the downtrending channel, there is a real possibility by month end, which is going to be tomorrow's trading day, that we could reach that price target at 267.5, which will be a double support between the channel bottom low and the price target at that level. That does slightly undercut the June lows, so if we do continue to see more stop loss raids below that level, we have the next price target to the downside at 258. But I continue to warn you, this is a very strong support zone, so there is a possibility we get a very strong bounce out of this level, and it will start to look more bullish if we can break that daily high at 280 and then go close that gap and break resistance around 284. The critical risk level in the triple Qs remains 293, so it remains a downtrend in a risk-off market while the triple Qs are below that level at 293, so do keep that in mind. If you look at the triple Qs weekly chart, we are already at the 200 weekly moving average, so this is going to be a very critical support zone, which means you can take on long risk at this level knowing you have very well-defined risk, or you can short the market if we start breaking down below these support zones. On the Dow Jones, we were down 1.52% as the Dow Jones continues to fight off the bear market because we continue to get end of day rallies right as the Dow Jones is about to close down 20% for the year. Now we have a very obvious elephant in the room with that gap fill at 285, and if we continue below that gap, we have the price target at 276. and we have a very clear downtrend while we are making lower highs and lower lows. To the upside, we want to look for that resistance right around 297 and the gap fill at 300, and then we'll have resistance above there at 305.8 and the critical risk level at 312. As you can tell, the Dow Jones volume is starting to drop off, but it is a weekly gap at 285, and we do know those typically get filled, but we also do have a lot of gaps to the upside, so you need to be very careful around these levels and manage your risk in the Dow Jones around 293. On the Russell 2000 IWM ETF, we were down 2.24%, and again we came right back down to the June low at 163.75, and we did bounce off that level yet again, but we are currently still making lower highs and lower lows in this downtrend. If we break the June low, the next price target will be 159.5 with upside resistance at 168, 171, 174.7 and the critical risk level at 178. Again, these are downtrends until they're not, so we need to see price action breaking the downtrends, and then we can start to say that we possibly found a W-shaped bottom. On the ARKK ETF, we were down 5.48% with a very sharp rejection from that resistance at $40, and we're right back down to the support trend line at 37.5. If we break the support trend line, you're looking for a retest of the June closing lows at 36.5, and below the June closing low, we're looking for the next leg lower at 33.7. This is very clearly still a strong bear market, and we'll need to break back over 40 and then back over 42 to 43 to start snapping the downtrend. On the VIX, we were up 5.43% as the VIX continues to close above 30 with the fourth day in a row, and we still have a bull trend in the VIX, so this remains a very volatile market while the VIX is above 30. Remember, volatility does work in both directions, so don't just assume because the VIX is above 30 that we have to go lower, because there is still the possibility of VIX crush, which is going to lead to higher prices, and that will be the VIX closing down below 30. It's going to remain a very volatile market until the VIX crushes all the way back down below 24, so do remain cautious and expect plenty of volatility in this condition. On Bitcoin, we are currently up 0.4%, and Bitcoin continues to hang in there at the June lows around 19,000, and this support level has just not failed. There continues to be buyers around this zone, which is definitely a sign that there is a lot of demand at this level, and you are still seeing very decent volume at this support. So as you can tell, this wedge is running out of time as we go into October, so eventually we are going to see a breakout to the upside or a breakdown to the downside, with a breakdown below 19,000 bringing us down for the next leg lower at 17,000, and a breakout to the upside taking us back up to retest the highs at 22,500. If we get the bull breakout, we'll need to see a higher low and higher high forming, and then we can start to get more bullish on Bitcoin, but for the time being, you are managing a risk around this support zone at 19,000. On Amazon, we were down 2.72% as Amazon is still closing right on top of this support zone at 115. And if we break this support, you're looking for the next leg lower at 106. And if we bounce from this support, you're looking for resistance at the gap fill just below 126. On Microsoft stock, we were down 1.48% as Microsoft continues to reject from the resistance at 242, but we are starting to build a base of support right around 236. If we break 236, look for the next leg lower at 231. And if we break above 242, you're going to have resistance at 246 and then 252. On Nvidia, we were down 4.05% as Nvidia continues to hang around this support at 122. And as you can tell, the Bollinger Bands are starting to squeeze very tightly on the daily chart. And I still think there's a very good chance we bounce off this zone and go fill that gap at 142. Look for resistance at 127, 135, and the resistance trend line at 141 to 142. On Tesla stock, we were down 6.81% today as Tesla got absolutely routed below that critical risk level at 283. And then we did see a daily closing low below 270, which was our neckline for the double top. So this increases the probability that Tesla is going to go for a full measured move lower, which should easily fill that gap down here right around 250. We do have a potential support at 258.6, but with this confirmed double top, you do want to be extremely risk off on Tesla while it's below 270, which means you should be expecting more downside in Tesla as long as the price action continues to remain below 270. You should only be getting more bullish if we can break back over 283 and get back over that 50 daily moving average. On Apple stock, we were down 4.91% today as the big blue chip name Apple that helps move the market got absolutely routed and came all the way back down towards this support at 142. And intraday, we did test the channel bottom low right around 141. So this is going to be a support zone right around the low 140s, but if this level fails, we'll be looking for Apple to go all the way down to about 136. To the upside, we still have resistance at 147, 150, and 154. And as you can clearly tell, Apple has lower highs and lower lows and is currently trading in a downtrending channel. On the financial sector, we were down 1.26% as we continue to hold that support around 30.4, and we do have two huge gaps to fill to the upside. If we break the support to the downside, continue to remain risk off because we are currently in a downtrend. The industrials were down 1.73%, getting rejected from that resistance at 85 and very likely trying to go close that gap just below 82. To the upside, if we break resistance, we do have gaps to fill to the upside, but we are currently in a downtrend. The healthcare sector was down 0.84%, getting rejected around the 13 EMA and still between resistance and support with a trading range of about 120 to about 125. The energy sector went absolutely nowhere today and got the second daily close over the 5 EMA, so we are seeing relative strength in the energy sector, which increases the probability we can go up there and close the gap right around 76. You can try to stay bullish above the 5 EMA, but if we break down below that level, we could be coming back down to retest the low around 69. So jumping back over to the S&P 500, I think you have very well-defined risk right here at the SPY level of 358 and the June lows. And if we can hold this support, there is still the possibility we have a bear market within a secular bull market. Remember, we're letting price action do all of the talking and we don't have any opinions about which scenario is going to be the correct scenario. We know we need to follow the price action and be prepared for any scenario. If you have a bias and you're already assuming the June lows are going to break or that we're already going to break down below the 200 weekly moving average, then you're going to bake that bias into your trading and you're going to be absolutely caught off guard if we do indeed see a strong bounce off this level. So do know both scenarios and just make a trade plan where you're prepared for both. It's all about managing your risk and staying disciplined and being very patient, because some of these price targets do take some time to unfold and you never go anywhere in a straight line. So just be prepared for plenty of volatility, which means you need to be prepared to get whipsawed. So manage your risk very well and only take on risk near your risk levels. Buy at support and sell at resistance, and short at resistance and cover at support. Also, don't forget, this is the last week to claim the 50% off discount for bank trade alerts. All you need to do is apply that coupon code Labor Day, all one word, no spaces, at checkout to claim 50% off your first month of bank. Bank only trades ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. If you're interested in joining Bank or the Stocks Channel Discord server, you can find out how to join by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.